Hey guys, welcome back. Today we have another great Spac stock for you with a lot of upside potential that you may want to buy now. Of course, remember this is a Spac stock, so it's still considered a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. Today's Spac is FTAC Olympus Acquisition Corp, FTOC. This is another Spac trade that's a bit different from our typical Spac strategies to make money. If you haven't watched it yet, please check out our video above about how to trade Spac stocks. As you recall, we usually don't buy Spac stocks after it has made a deal announcement. We usually sell because the price has gone up. But this one's a bit different, and let me explain why. Last week Wednesday, FTAC announced that they would acquire Payoneer with a valuation of $3.3 billion. Upon the news, the stock popped to as high as $14.50, but has slowly fallen back to $13.50. Thus, investors must think the stock is fairly valued, or it could also be selling pressure from hedge funds taking their profits. In any case, we can't assume it's a bad deal, and we must look deeper into Payoneer's business to determine if there's a buy opportunity here. So first, let's take a look at FTOC and see who they are. In August, FinTech Acquisition Corp, FTAC, issued the latest Spac, FTOC, raising $750 million with the intent to acquire a fintech company. FTAC is the sponsor of the Spac and is mainly comprised of the management team at Corp. The Corp is an online FDIC-insured commercial bank that works behind the scenes with private label banking and technology companies to provide solutions to non-bank companies ranging from entrepreneur startups to Fortune 500 companies such as Intuit, MasterCards, PayPal, SoFi, Uber, Venmo, and many more. Currently, they're the number one issuer in prepaid credit cards, 8th largest issuer of debit cards, and processed over $20 billion in monthly merchant transactions. As for leadership, this Spac is led by Betsy Cohen, who is the founder and CEO of Corp. Under Betsy's leadership, FTAC has completed 4 successful Spac deals since 2015, with the latest being Card Connect and International Money Express returning over 90% and 65% respectively. In looking further at Betsy's profile, she's definitely an amazing person, being the only female bank CEO in Pennsylvania, having co-founded Jefferson Bank before selling it to Hudson Bank shares, and then later founding the Corp as well. As we know, it's very difficult to set up a bank with all its complex and stringent legal and regulatory requirements, but Betsy has done it twice. Thus, Betsy and her team is very knowledgeable and experienced in banking and will be a great asset to bring Payoneer to the next level. Next, let's take a look at Payoneer. Payoneer is the leading all-in-one cross-border payment platform that empowers small businesses, online sellers, and freelancers to pay and get paid globally, similar to a PayPal or a Square. For the past 15 years, Payoneer has helped millions of SMEs further scale their business for digital payments. Today, Payoneer is in more than 190 countries and has transacted more than $44 billion in 2020. They are focused on digital commerce and is well positioned to benefit from this new trend, especially with COVID and lockdowns limiting restrictions on brick-and-mortar businesses. What's interesting and unique about this business is that they're focusing on cross-border transaction. As we all know, today's commerce is all global. However, it's very difficult for small, medium-sized businesses to do cross-border transactions as there are many different regulatory and tax compliance issues with each country. Each country has its own policies and nuances. Thus, as an all-in-one platform, Payoneer can help make this process simple for buyers and sellers to get paid and be paid. Hence, this is a good business for them and should lead to higher growth. Here's a quick video promo of their company. Next, let's quickly go over some of their products and services. Payoneer, as we mentioned, provides a digital payment platform with a focus on global transactions to support SMEs. Their main services include global payments, multi-currency accounts, physical and virtual debit and credit cards, billing for account payables and receivable, access to working capital loans, and tax and compliance services. They're kind of like the middleman behind the scenes that facilitate transactions between the merchants and the customer or businesses and users. They currently work with 9 of the top 20 most valuable companies, including Shopee, one of the largest e-commerce platforms in Southeast Asia. Next, in looking at their competitive advantage, Payoneer has a large global network and reaches to over 190 plus countries. More importantly is Payoneer's vast experience in risk management technology, which is key to helping SMEs navigate legal compliance and complex regulatory bodies for each country it does business in. As Payoneer has been the leading and product platform for over 15 years, it has built a strong brand reputation, and thus is very difficult for new competitors to enter. This is further solidified by other large companies that currently use Payoneer services, including Fiverr, Amazon, Google, Airbnb, and others. These are huge digital companies that does millions of transactions a day and must thoroughly vet all their partners. Hence, this alone proves that Payoneer has a really good product. In comparing them to their most direct and strongest competitor, we see that Payoneer has a really good rating of 4.4 among 24,000 reviewers. Although Square is ranked higher at 4.7%, it is also based on just 2,700 reviews, and is a lot better than PayPal, which has a really bad 1.2 score. Next, let's take a look at their operational and financial performance. For 2020, they will end the year with around 346 million revenue, which is up 31% year over year. Their transaction volume increased 67% year over year to 44 billion, and their customer base now has grown to over 5 million customers. Thus, they have done really well during this tough pandemic environment. For the next 2 years, they expect to grow revenue 25% year over year, as they will also be expanding into new markets and pushing other products beyond just payment for additional revenue stream. For example, they have a new service called Green Channel, which is a matching and onboarding program designed to connect marketplaces with top merchants that have been pre-screened by the company's robust fraud prevention and compliance capabilities. This is kind of similar to Alibaba's screening service, in which they help you look for merchant sellers. There's also a lot of potential in providing working capital loans, which they have just started promoting. Hence, the goal is to continue to add more products for cross-selling to its growing customer base. Next, in looking at this deal and Payoneer's valuation, we see that they are being valued at 3.8 billion and will get a cash infusion of 563 million, giving them an enterprise value of roughly 3.27 billion. The company intends to use the cash to pay off existing debt of 40 million and will be debt-free with cash on hand of about 525 million. At this level, they're trading at 7.6 times 2021 sales. But this doesn't tell us much unless we compare it to their peers. Here, their main peer is PayPal and Square. So in looking at this group, we see that Payoneer is trading at about 1/5 the price, amid a bit of slower growth of 25% compared to 29%. Thus, adjusted for the growth difference, they're trading at about 1/4 compared to their competitors. Hence, Payoneer does seem very cheap at these levels. Next, in looking at the company's management, we see that it's being led by seasoned veterans from many large-known finance companies such as MasterCard, First Data, HSBC, Square, and MoneyGram. Additionally, with all of Betsy's knowledge and connection, I'm very confident that she will be able to help Payoneer become an even larger dominant payment and mobile bank processor. On top of that, there's also an earnout share, which will reward management if the share price is above $15 for more than 20 days in a 30-day period, and more than $17 in a 30-day period. The management team will be able to earn 30 million shares, in which is more than 300 million at today's prices. Hence, I believe this will further align management's interests with shareholders. Lastly, let's take a look at the technical to find a good entry price. Currently, there's a lot of resistance at $14.50 with really good support at $12 and $10.50. It last traded around $13.50 yesterday. Thus, I think it's quite cheap at this level given the valuation discount to its competitors and the huge market size that Payoneer should be able to capture given all the shift to online sales. Full disclaimer, I bought this stock last week and will look to buy more if it continues to go down further. That's all for today. If you find this video helpful, please hit the like button. Also, comment below and let me know what you think about the Spac and or Payoneer. And as always, this is just my opinion, so please do your own further research. Happy trading, and please don't forget to subscribe.